So the stock market finished mixed today, with Dow Jones up a little bit, S&P, I think it was about flat or down a bit. NASDAQ has had another day of a bit of a sell-off, although it did pull back off of its lows. Tech, AI stocks are still having a bit of a challenge. Let's see, if this is just nothing and there's buyers come back in, or if it's signaling the start of something larger. But today, the Federal Reserve released its meeting minutes from the July meeting, and the markets were kind of checking that to see what it maybe portended relative to the September meeting. Markets are pricing in, including the FedWatch tool, I think 82% chance of a rate cut in September. So out of Kitco today, it says, although two Federal Reserve Committee members voted to lower rates during the July meeting, and by the way, things have changed obviously on the ground. We got the jobs numbers. We have recent CPI numbers. So, it's all pointing towards a September cut, but very possibly and likely, if they do cut in September, a slower pace of rate cutting throughout the year. So it says, although two Federal Reserve Committee members voted to lower rates during the July meeting, the minutes show broad support for the bank's neutral monetary policy, meaning staying where they're at, as the threat of inflation looms larger than slowing momentum in the U.S. labor market. And so will they sacrifice the labor market to control inflation or vice versa? Participants generally pointed to risks to both sides of the committee's dual mandate, emphasizing upside risk to inflation and downside risk to employment. A majority of the participants judged the upside risk to inflation as the greater of these two risks, while several participants viewed the two risks as roughly balanced. It says September's rate cut is all but priced in. But the Federal Reserve's hesitant stance could dampen expectations for aggressive rate cuts through the rest of the year. It's very interesting because gold today finished up about, I think it was about $30 an ounce. Silver also had a pretty good day. I think closed up over 50 cents an ounce back in that 38 level. What's interesting to me about the move in the metals markets, and a friend of mine who's a big stock market guy said he thought it was the move into metals today was a fear trade. But the 10-year yield really didn't move. And so if there was really any kind of fear in the markets, typically, as a layperson observer, typically you would see a move, downward move in the 10-year yield, signaling people, or investors or were buying bonds. I didn't see that happen. And so again, from the title today, what is this telling us? Seems to me that the fact that gold and silver had a good day today, and I didn't see anything that would lead to a panic or a fear trade. The markets didn't sell off in any meaningful respect. The Dow actually closed up. So what's going on? Well, there's an interesting story today released, and again, I'll let you guys give your thoughts and comments on this. I'm not going to weigh in on good, bad, or indifferent. I'm just going to give you the story out of CNBC. Trump has snapped up more than $100 million in bonds since taking office. So U.S. President Donald Trump has been on a multi-million-dollar bond buying spree since taking office in January, investing in debt issued by local authorities, gas districts, and major American corporations. It says across 33 pages of filings with the U.S. Office of Government Ethics, or OGE, dated August 12th, the president outlined 690 transactions that have taken place since he took office. The documents were made public on Tuesday. This is according to CNBC's calculations. The purchases had a total value of at least $100 million, assuming the lower value end listed for each disclosed transaction. It says by law, the U.S. President, Vice President, and other select officials must periodically declare reportable transactions to the OGE. The precise value of the dealings does not have to be reported. The extensive lists filed earlier this month show that over the course of this year, Trump has bought bonds sold by various entities. Okay. He also bought debt issued by an array of big name companies, between $500,000 and $1 million worth of bonds issued by T-Mobile, US, United Health, and Home Depot in early February. So the point of me sharing that story with you is to explain, as you guys probably know, if the value, if interest rates come down, as rates drop, the value of bonds increases, right? So there's an inverse relationship there. And so we all know that the administration has been out, kind of putting some pressure on the Fed to lower rates. And frankly, it's not just obviously Powell that makes a decision. They have to vote on it. There is also the Fed chair change coming up, I believe, first part of early next year. And there's another open seat going to be available for Trump to appoint another Fed governor. So we have all these things in play right now. Seems to me, let me know what you think, tying it full circle again like I try to do, that gold is obviously, I'll say obviously, gold from my perspective is giving the green light or giving the thumbs up to the fact that there's going to be rate cuts, okay? And obviously gold normally does better in lower rate environment because the cost of holding gold and silver as well, the opportunity cost is not as great, right? You're not giving up as much yield if the rates are coming down. So typically gold and silver thrive in a lower rate environment. So I'll leave it there for you to give me some thoughts, and just keep an eye on this. Again, don't load up my comments with your input on whether the Trump individually acquiring bonds poses any kind of a conflict. Obviously, the rules are they have to report it, which apparently has been done. And again, I'm not weighing in on that, but it is telling, right? Because if Trump thought we were going to be operating in a higher rate environment for much longer, or even a neutral rate environment, the question is, would bonds be the play? Okay, so I'll leave it there today. I appreciate you guys. If you're not subscribing to the channel. Give the video a like if you enjoy the content. Please share the videos and leave me your thoughts and comments. Let's see how the markets continue to digest information throughout the week. And let's see if the NASDAQ can kind of regain some footing here and continue on its march to more all-time highs. The stock market and the housing market will certainly, thrive or get a boost if it becomes clear in September that the rates have been cut or are going to be cut. All right, so that's what I saw today that was worth sharing with all of you. And with that being said, I'll talk to you soon. Bye.